It is earnings season. It's awesome. Hearing those comments about supply chains, it's impacting some companies, others not so much, like a UPS. But, Daniel, what has you excited so far? Because a lot of news has come out the past couple of days on some big name stocks, and you're going to continue to see that over the next couple of weeks. I can't stress this enough how important it is to listen to these conference calls. Not even if you own UPS or FedEx or whatever, it's listening to the supply chain bottlenecks. Are they able to raise prices effectively? They'll talk about global. They'll talk about so many different demographics, different markets. You get so many ideas, and it gives you just perspective of what I'm seeing right now is not everyone's impacted by the supply chain issues. Some of them are getting it done. Apple's getting it done. You look at semiconductor companies, there's several that are getting it done. So the F5 warned supply chain concerns, GE warned, yet UPS, fantastic, right? So it seems it's not like across the board. It's impact. Tesla warned for the first time about supply chain issues, which is amazing, which kind of tell you what the hell's going to go on with the rest of suppliers who are, what is it, like 50 EVs expected to be launched this year, and everyone's like, oh, you could buy it, and with taking orders. How the hell are they going to produce this shit? How? That many coming out to the point where Tesla just said, we're not producing any brand new models this year because we can't, because of the chip supply. So what does that say for everyone else who's producing brand new models? A lot of stuff going on, right, Dan? It's pretty interesting. I don't know. Where do you want to start? We can even start with Netflix if you want, right?
Yeah, that'd be good. It's really continued its rally from last week. And I wonder, that's funny you bring up Netflix. I wonder if the argument in EVs, where Reed Hastings, co-CEO of Netflix, has been saying for years and finally admitted in the most previous conference call about, you joked about, hey, competition is a good thing. You're not worried about competition. In the latest quarter, he said, hey, we are seeing some market share decline or just more competition from them on market share, which is positive. It'll be interesting to see how that equates to the EV market. But Netflix sold off real hard, got absolutely crushed after its earnings a few weeks ago. But then Bill Ackman, Pershing Square Capital, gobbled up over 3 million shares, followed by a insider buy of co-CEO Reed Hastings, bought $20 million worth. Now let's put that in perspective. I don't want to shrug that off, but you always like to point out, hey, it's when you see insiders like directors or whatever, sometimes those are funds or major players, but CEOs buy great. 20 million is a huge amount, even if he's worth, I'm sure he's just a gazillionaire, but you got to be cautious with all the money.
Position though, right?
What's that?
It's $1 billion position, right? Did he buy 3 million shares?
Well, that's Bill Ackman. I was talking about the CEO.
Oh, the CEO.
He bought $20 million worth.
Yeah, Hastings. Yeah,
$20 million worth. I mean, even if you got a ton, that's a lot. So just keep that in perspective. But man, that stock has rallied. And the bigger picture to me, I really don't have an opinion on Netflix. I've never dug into it extensively. I've never, it's great, but it just doesn't get my attention for whatever reason. What gets my attention is that when you have volatility, Frank, and the narrative changes from just growth. Netflix is in a new position now. It's got pricing power. It's raised pricing. We'll see how that goes in the future as equates to earnings. But now, instead of just growth and pay for content at all cost, they're going to manage $10 billion in debt. They have earnings. They're trading. I think their forward PE is close to 40-ish, which is high, of course. But the narrative has changed, and you see these value guys like Ackman come in. It just shows you that, hey, volatility, it's easier said than done. I'm not acting like a know-it-all. But when you have major market pullbacks in stocks like this, Frank, and we're going into the stock pickers market, don't be afraid to follow the big guys. Use this as an example to go down that rabbit hole if this interests you. It's just good to see that when you have pullbacks, the sky isn't falling all the time, and people are willing to step up in a big way and make some big purchases.
What amazes me here is, Netflix oversold, but we're looking at February 2nd today, okay? And let's go through the timeline here, which is funny, because you saw these guys report on the 21st of January, not too long ago, right? So they report horrible quarter. Their guidance was terrible. So, much, much less ads are expected. They had, Reed Hastings goes on there. Probably the most negative I've ever seen Reed Hastings covering for probably about 15 years on conference calls and stuff, saying that, competition's a big deal. We don't know why. The acquisitions, it hasn't, it's a bit slower than pre-COVID levels, right? The engagement and viewing is up, but the acquisition growing a bit slower than pre-COVID levels, right? Not having fully recovered. But he paints this whole entire picture like, hey, you know what? Like almost like his tail between his legs. And like I said, he's the most competitive guy in the world. If there's any way to really get your stock down, because everyone after that quarter, Daniel, was saying, does everything need to be reset? Is this industry done growing? We're seeing it's getting much, much more difficult to have pricing power and ad. Everybody has streaming. The whole media platform. Everybody has a streaming platform right now. And he painted this picture. You know, I'm just saying, I'm not a conspiracy theorist, and I love Reed Hastings. I think he's fantastic. But if I wanted to buy $20 million worth of stock, this is how you do it. You come in on the conference call, the most positive guy in the world, kind of with your tail between his legs, and then boom, what happens? You see Pershing Square's taking a big freaking position in it. Then you see him buy $20 million worth, and now the stock is taking off again. Look, Netflix is the greatest streaming company in the world. There's nobody even close. There's not even a second or third. There's nobody even near them. The content that they have, how they have so many actors. There's not one actor and actress that ever says anything bad. At the top in the world, all want to work for Netflix. They all make a fortune. They all do great. He has it almost on lockdown. People all want to go to Netflix right now. I remember back in the day, they were pissed in the online streaming platforms. The actors would freaking go to the award shows and be like, oh, you know, this is bullshit. And, you know, they complain about reality shows first because, you know, people didn't have to get paid. They didn't pay these reality shows and all this bullshit, and networks are making more money. All this garbage he's been through. But to see where he is right now and all these actors and actresses, if you look at, you know, whatever, the biggest draws, you can say it's Adam Sandler, that's Nicole Kidman, that's Reese Witherspoon, you know, all of them. I mean, it's amazing. I mean, Ozark's just on that platform, which is fantastic. It's always new content. They get it. It's easy to use. People love it. They'll never cancel it. And you have pricing power. So, you know, for me, I think this, you know, look, the stock is doing well. It's been all over the place. You know, if you have stop losses, you probably stopped out here and there. And I get it. And I understand it now. You know, you're seeing this news on it. But, you know, it's always nice when basically the largest individual shareholder and the CEO of the company is really, really buying a ton of this, when you would think Reed Hastings might want to sell out of his position because, hey, I've been doing it for a while. Let me transition, start selling shares. For him to buy that much right now, I told you, he's more competitive than ever. It is interesting to see this trend. But yeah, those insider buys and you know, Pershing Square coming in, you know, at these levels and how much it's sold off is pretty incredible. It really is pretty incredible. And using it as a buying opportunity. Let's see where it goes from here. But it's just interesting. Like, that's the playbook. If you're a publicly traded company and you really want to buy your stock, this is how you do it. Yeah, all right, it's already down. You come up this quarter, then you wreck it at the bottom, and now you're able to buy it, which I guess, you know, is tough because a lot of people got killed, but that's how you do it, right?
You know, it comes to mind, and this is frustrating because we recently stopped out of that in Dollar Stock Club.
It is
totally unrelated to. I mean, we recommended that a little ways back, and we're bouncing around, but just got caught up in the real massive sell off. Yeah. What comes to mind when you brought that up? Not that you're saying he did it on purpose, but that is kind of funny to put two and two together on talking down your stock and then buying it. But remember when Ackman, speaking of these two teaming up, or not teaming up, not saying that they were doing anything, but remember Ackman going on and the coronavirus lockdowns and almost coming to tears about how everything's just going to melt down. And yet then it came out that he had puts. He was on fast money, I think. Yeah. And I mean, he's taken and he turned around and he cashed that out and bought some huge long position. But anyway, it does point to a playbook like that, Frank. You're right. So the takeaway there is take everything with a grain of salt. You know, when Ackman was crying on TV, that wasn't the end of the world. That was a good positioning, repositioning, and or money rotation. Let's put it that way.
And just, you know, for Bill Hackett's circumstance and the tears and everything, whatever it is, but he was right. Like he played his position, right? I'm not talking about his position, but he was right in terms of the market. Like, people could say, well, I knew it was a buying opportunity. You know what? You didn't know it was a buying opportunity, because I didn't think it was a buying opportunity either, because I had no idea the freaking government would spend $10.5 trillion to inflate this market and say, okay, we're giving everybody loans. We're giving anything anybody wants. Here you go. Free check, free money. Like, nobody anticipated that. Okay, maybe $1 trillion. All right, 10. They went nuts. It was just, okay, this is going to end. It's going to get better. They're going to reopen things. And now you have all this liquidity in the market. No surprise that you have inflation here. But if they did not do that, holy cow. I mean, you're seeing a totally different landscape today than, you know, where stocks have you know, rallied over the past couple of years. And again, we're a little crazy start to the year. It's coming back a little bit, but man, you know, just the tears and everything. It is a playbook, and it's kind of funny. But let's go into UPS, Daniel, because UPS blew out the numbers. Guidance was good, and you're looking at the stock really taking off today, or yesterday. And just a few things here. Okay, so UPS said, and this is right, they'll have direct links. These are the guys that know the most. These guys at railroads, at FedEx, they're going to know the most about supply chain issues, right? Since they're delivering stuff and knows a ton of this, right? I have a relationship with all the trucks. So they said, you know, JB Hunt and Kirby noted that it's, you know, it's tough to hire people for trucking and labor and stuff like that. You know, supply chain issues, again, staffing issues, supply chain jams, fast logistics. Union Pacific come out and say the same thing. But UPS blew out these numbers, blew them out. And they did it telling them that we're still seeing very, very big supply chain issues. What happens if that clears up? Where do you think FedEx and UPS are going to go then?
Yeah, absolutely. I mean, you talk about a massive tailwind. This is just, Frank's talked about this. Not talked about you like you're not in the room, Frank, talking to the audience here. You've talked about this, how this is transitioning into a stock picker's market when not everything, a rising tide lifts all boats and things of that nature. The execution on the management side here is amazing. Yeah, costs rose about 8-9%. I think it was a little 8 point something overall, which is significant, right? Your bottom line, your costs going up almost double digits. That's a lot. But the way they manage that, they're cutting, not corners, but cutting costs where they can. Their margins are staying strong and they have pricing power. I mean, their price per packages is rising and they continue to see that going forward. I've never really dug into this stock. I just have to highlight, you got to give credit where credit is due. And that management team, along with FedEx, those guys are just amazing. It's no coincidence, Frank, that you take UPS, FedEx, and the United States Postal Office. And it's just a coincidence that one of them loses billions while the other two make billions. Won't go there, just highlighting the importance of management and execution. So if I had a hat on, I would definitely tip it to them. The stock was up 14% last time I looked on Tuesday. That's incredible, Frank. So yeah, just great job on management execution and what investors need to pay attention to.